Hey guys, what's up, how's it going? My name is Robin. Welcome back once again. In today's video, we're going to be focusing all about the VFV Vanguard S&P 500 fund, and I'm going to be showing you guys why I think this is such a great ETF that every Canadian investor should hold inside their portfolio. Now, if you guys watched my channel before, you know that I'm a big investor when it comes to US stocks, and I firmly do believe that all Canadians should hold US stocks inside their portfolio to at least some degree. And the reason why, as you're going to see throughout this video, is mostly because of the fact is that the US market is one of the biggest markets in the world. They've had some of the best returns when it comes to their ETFs, and the nice thing about the US economy, it's a nice diversified economy with lots of different sectors and lots of different things. And that's one of the big reasons why I'm a big fan of it. So throughout this video, I'm going to show you guys some of the reasons why I think it's one of the best ETFs and why I think it's important as a Canadian investor that you guys do need to invest into US stocks, at least to some degree. So the first thing we're going to do is we're going to talk about Vanguard, and we'll go inside the fund, and I'll show you guys some of the different features, and we'll review some of the returns and how well the S&P 500 VFV ETF has done over the past little while. So really quickly, let's spend a couple minutes talking about Vanguard. So if you guys don't know, Vanguard is one of the most popular providers when it comes to funds, especially for Canadians. And the reason why is because they have some of the best funds out there. They have lots of variety. They have very, very low fees. And this makes it perfect for passive income investors such as myself. Since the S&P 500 really is one of the most popular ETFs out there, it shouldn't come as too much of a surprise that VFV, which is a Canadian version that Canadians can buy in Canadian currency, it's not surprising that this ETF is actually one of the most traded ETFs on the TSX. And just a quick little recap about the S&P 500 if you guys aren't familiar with it. The S&P 500 is one of the most standard ETFs, kind of like the holy grail, the benchmark that people compare everything to. It's kind of one of the best performing funds, and the purpose of the S&P 500 is to track the top 500 companies in the US. And VFV is basically does the same thing. It tries to mimic the S&P 500 while also giving the Canadians an easy way to buy into the S&P 500 with Canadian-based dollars. So one of the most important things it is to focus on when you're picking an ETF is the overall returns, and ideally you want to have an ETF that's been around for a long period of time that you can see consistent returns over the course of when it first started to today's current date. So VFE kind of fits that for the most part because it has been around for quite a while. It first started in, I think it was 2012, we can see here was the first inception date. So this fund is about almost 10 years old, just approaching the 10-year mark, and we can see here that it's done quite well. So we'll cover this really quickly here. So year-to-date return of VFE obviously is a little bit low because the US markets have got a bit of a dip recently this year. It's the beginning of 2022 in case you guys are just wondering for future references if you guys are watching this video. But the 1 year return is plus 4%, which obviously isn't very much, but that's because of the recent dip. The past 3 years, we've seen a return of plus 40%, and the past 5 years, we've seen a return of 75%. So obviously pretty consistent returns. This fund has done quite well. And if we go over to the Vanguard page, we can also take a peek at the yearly returns if you guys kind of want to see how this fund has done since the beginning. And once again, total return by NAV is this column right here. So your total return would have been in 2013, 40% gain, 2014, 23%, 2015, 20%, 2016, 8%. And you can see most of these years are actually like double-digit returns other than the odd one here and there, but it's been pretty consistent, pretty safe. Obviously, US markets have done well over the past decade or so, but as you guys can see, the reason why the S&P 500 is so good is because it's just been consistently performed well, and since VFE tries to mimic that as closely as possible, we can expect more or less the same returns. The other important thing to mention is going to be some of the basic facts of the ETF. So once again, the ticker, if you guys haven't already clued in on, is VFV, S&P 500 Index ETF. The market price is currently $95 Canadian, so it's just under $100. The management fee is super low. We'll talk about that later on in the video. The dividend yield is 1.10%, which is pretty low. And when it comes to the dividend yield, it is distributed quarterly. So I personally hold VFV in my personal accounts. I plan to put in my RSP as well as my TFSA, and there is a withholding tax on the dividends in case you guys don't know in the TFSA. But the big thing to point is that because of the dividend yield is so low, you don't get a good chunk of that return in terms of dividends. So even though you're taxed 15% of the dividend yield, it's not going to be a lot because remember, we're getting most of that growth is coming into stock growth. And we can see that with this chart here. Just been consistently good stock growth over a long period of time. So that's where most of the returns of VFE is coming from. It does have a dividend yield, but it's more of a growth fund with a tiny little bit of dividend yield with maybe some, companies that are growing that dividend yield over time. But the dividend yield, relatively speaking, is pretty low. And I mentioned earlier about one of the big reasons why I like this fund is because you get lots of diversification. So as a Canadian investor, we don't have a lot of diversification with most of our investing ETFs. We kind of have a lot of financials, a lot of banks, a lot of energy stocks, and that's for the most part pretty much it, like generally speaking. But the nice thing about the S&P 500 and why VFV is such an attractive investment for Canadians, because it helps to balance out your portfolio, not only in getting US stocks, but you also get a lot of diversification. As you guys can see here, so we have 500 stocks inside the S&P 500, and we got a pretty even split here. So most of it is information and technology, and that's kind of changed recently with a lot of the big tech stocks, but we see an increase in healthcare, consumer, basic different consumer stocks here, financials, communication services, industrials, pretty even with that 10% split here. And then we have some small ones towards the bottom, which is more the energy, real estate, utilities, and you might get this more in Canadian funds. So we kind of get that nice little balance there. But as you guys can see, the S&P 500 is pretty diversified. And if we look at the top companies that are in here, we see good quality companies. Once again, you're going to see a lot of tech stocks kind of at the top because that's the biggest holdings, but we do get a little bit of different things here. And so we can see Apple is the #1 stock at 6% market value. This means that this is how much of the fund is invested into the stock. So Apple at 6%, Microsoft 6%, Amazon, Tesla, Google, Nvidia, Facebook, a bunch of pretty common ones, but we do see some different sectors here. So it is important to understand that, but those are some of the biggest holdings and when it comes to VFV. And one thing I mentioned earlier was the MER or management fee. And the one thing I really like about Vanguard funds, as most of you guys know, is that they're pretty low fee. And VFV being one of the top growth-based ETFs there is, and when it comes to getting a good quality and a high return, this is going to be one of those funds. And the cool thing about it is it actually has one of the lowest management fees there are. The management fee for VFV is currently 0.09%, which is extremely low. If you look at the price of most mutual funds or even different ETFs, like mutual funds are going to be the highest ones you're going to get out there. We can expect a mutual fund fee of 1% to even a little bit over 2%, and that's quite a bit of money, as you guys can see here. If you had $10,000 and you were paying 2.5% of a fee, you'd be paying $250 per year. So obviously that does add up, especially if you have a lot of money. If you had 100K, that would be about $2,000, almost $3,000 you'd be paying to a fund or an advisor to manage your money. If you just buy VFV, you won't be paying anywhere near that with the low fee of 0.09%. So obviously, in the beginning, it's not the biggest deal, but when you think about investing over a long period of time, or if you have a big chunk of cash, that really makes a big difference. And that's money that you're losing that you're not going to be able to invest, and it does affect your return over time. So at this point in the video, we probably come to the conclusion that holding VFV or some type of S&P 500 US based stock ETF fund in your portfolio is probably a good idea. The big question that a lot of people have is how much should you actually hold inside your portfolio? Now you could theoretically hold VFV or the S&P 500 100% inside your portfolio, as in that's the only ETF you buy. And you might do quite well with that. However, it does come with a little bit of risk. And in today's market, it's kind of interesting. I'm kind of happy that we've seen a bit of a dip recently, because I'm going to highlight the difference between holding, all your funds into one specific ETF, because there are certain risks associated with that. So me personally, I do hold a big chunk of my portfolio inside of VFE. I typically hold a portfolio value around 60% US stocks, with the other 40%, give or take, being Canadian stocks. But it does kind of vary from here to here, and I do kind of change that periodically through time, but I try to hold that 60% range for my US stocks, and then give or take have a little bit less than Canadian stocks, just mostly for diversification, but also because the two markets seem to kind of, although they do move up and they do move down together, they sometimes move separate of each other. And by doing this, but basically what I mean is some years we might have a year where the US stocks do really well, and some years we have years where Canadian stocks do really well while US markets don't do very good. So you kind of have that bit of a difference. So if you ever intend on pulling money away from your portfolio, or you like to just have a portfolio that's not dipping too much, then having diversification inside your portfolio is always a good idea. So I would recommend, to some degree, even if you are a little bit aggressive and you want to have more in terms of US stocks, which I don't think necessarily is a bad idea, I would recommend holding at least some of your portfolio in different funds, maybe Canadian stocks or other international stocks, just to get a little bit of balance. But of course, holding Canadian stocks as a Canadian is always a good idea, because you get good benefits as long as you're buying good quality Canadian stocks. The big reason why I hold a lot of VFV inside my portfolio is because I've showed you throughout this video that VFV is one of the best performing ETFs. The US markets have performed really well, and if you would invest inside these ETFs, you've done really, really well and you've got a lot of growth. And I happen to be a little bit younger than some other people who do investing. I'm about 30 years old, so I understand I'm not super young, but I'm also not super old either. I'm kind of still relatively young, I guess, in the time span of investing. But one of the big things I would like to do is make a lot of income from my investments, primarily because I don't make a lot of money, and I also want to have a lifestyle where I work typically less than the average person. So obviously accumulating a big nest egg at a young age makes a big difference, but because once I can get that nest egg or that investment portfolio quite large, I can then take some of that money and put it more into passive income and kind of do what I want to do with that. So you guys can see that the main purpose for me is to get a lot of growth, and I get a lot of that growth from the US market theoretically, and my Canadian stocks as well, but the US market has done quite well. So for me, VFE is kind of more going to be a vehicle to get my wealth up and to grow my income, and then once I get it to the point where I'm comfortable, I'll probably take more of that and put that into passive income. But I will always be investing into VFE or the US market to some degree because of the solid growth that it has had. So it all comes down to your goals at the end of the day, what type of investor you want. If you like growth and you don't mind seeing big ups and big downs like we're currently seeing in the market right now, then VFE definitely is a good ETF to hold inside your portfolio. You just have to decide for yourself how much of ETF you want to hold versus how many dividend stocks or how many dividend growth stocks you guys want to have. It's all up to you guys to decide, and it really comes down to what your goals are as an investor and what type of portfolio and person you are. So I hope you guys enjoyed the video. I'm going to kind of end it right here because I've been rambling a little bit and the video is getting a little bit on the longer side. So let me know what you guys think in the comment section. If you guys enjoyed the video, please give it a big thumbs up. Let me guys know what you think of VFE, and do you hold the S&P 500 in your portfolio? Let us know in the comments. Take care, guys. Hope you guys have yourself a good week, and I'll see you guys later.